Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed to Invest. And today I want to talk about short squeezes. What are short squeezes? How do they occur? And what you can do about them to avoid them or take advantage of them. And ironically, when I was thinking about making this video, I thought about this video a few weeks ago. And I had it in my schedule. I was like, yeah, I'm going to make this video. And then all of a sudden, yesterday, a massive short squeeze I ended up coming up. So I have it on the screen today to show you what a short squeeze actually looks like. And it actually caught me off guard yesterday. I was actually trading this stock ATXI. So this is a perfect example of a short squeeze. It just came up. I was about to record this video and then voila, here we go. A perfect example. So what is a short squeeze? A short squeeze is when a stock has been heavily shorted, aggressively shorted, and then all of a sudden it just squeezes up massively, as you can see right here. And this happened a couple of times on this particular play. So it was shorted all through the week, shorted. Everybody's taking it short, and then all of a sudden a massive squeeze occurred. Same thing happened here, short, massive shorts, and then all of a sudden the next day, boom, the short squeeze occurs. And why does this happen? So if you understand the psychology of a short, someone that goes short is somebody that is betting on the market going down. They make money as the market goes down. And you're probably wondering, how do they do that? Making money as the market goes down. So what they're doing is they're borrowing shares from their brokerage, and the brokerage is offering them these shares. And what they have to do when they exchange these shares, and you need to watch I'm also going to put a link to my video, what shorting is, so you can get a better explanation. But this is just a quick one. They're betting that the market goes down because they're borrowing shares from their broker, and then they're buying them back at a lower price. So they'll borrow the shares from their broker. They will immediately sell them into the market, and then they will wait for the price to go down, and then they will buy them back at a cheaper price, and then they get the spread of those shares. So what happens is when shorts are shorting the stock, they're waiting for the price to come down so they can take advantage of that spread. And when they buy the shares back to take their profit, the squeeze occurs. And usually these squeezes will happen really fast because everybody's trying to take advantage of the price and get out and say, okay, I already made $50 on the play, I'm trying to get out now. And then everybody else sees that other people are getting out. The market gets stronger and stronger, goes faster and faster, because people are realizing they can't get out with their profit anymore. And it just becomes a re-fulfilling prophecy of people constantly closing out their positions. So that's how the squeeze occurs. And this happens on all types of stocks that are heavily shorted. It can be on these poor penny stocks. It can be on large cap stocks. Not as much on large cap stocks because people are not aggressively shorting these things because they constantly go up. It makes no sense to short something that's going up. But it does happen on these large cap companies as well. But it mainly happens on these small cap penny stocks that nobody knows what these companies are, and everybody knows these companies are garbage. So I'm going to take it down to a smaller time frame so y'all can see exactly what happened yesterday, just on a smaller time frame so y'all can see what's going on. Let's take a 2-day. So this was the squeeze yesterday. As y'all saw from the longer term chart, this thing has been aggressively shorted, so it's down really far, and then all of a sudden we have this massive squeeze. So the main squeeze happened this time period. I want to zoom this out a little bit more. The main squeeze happened within like these first couple of minutes on ATXI. So what I did, I ended up taking this short around the pre-market level. Let's zoom out a little bit just so we can get a better understanding of what's going on with this chart. I ended up taking this short around the pre-market levels here. because I was looking at it 9 times out of 10 when you see these plays that they're up really big in the morning, a lot of times they come up and then they drop all the way back down, and then they basically go crashing and burning back to where they came, because these are not good companies and they end up just falling completely down. And that's what happens 9 times out of 10. But occasionally you run into these scenarios where short squeezes occur, where somebody covers their position and then everybody feels like they need to cover their position and everybody gets nervous. It's just an emotional reaction to what's going on. So I took it short right here at that pre-market high level. That's usually where like the last bit of resistance, where if it's not going down, you take it short right there one more time just to confirm. And if it doesn't, you're done. So that's where I took it short. I ended up taking a loss on this trade because it just squeezed up crazy on me. As you can see, this thing just kept going and going and going, and it never came back down to this pre-market level. If I stayed in this trade, I would have lost a lot of money. It went up 88% from the pre-market high, and that's ridiculous. You have to learn to cut these trades. And what I want to explain now is what you should do when you're stuck in a short squeeze situation. If you're on the long side, you're happy, you're feeling good, life is good, and you see so much money being made on this side. As you see, if you took this thing long, you would have made a lot of money. This was 88% returns on this from the pre-market high level. But on the short side, you need to know how to manage your risk. So the first thing I recommend is learning how to size down. As soon as I saw what was going on here, I immediately realized, okay, I need to size down. I need to cut this. This needs to be done. And you can see this a lot on how the stock is moving. If you're looking at the candles, you see how the candles are getting bigger. They started off really small. These are mini candles, nothing too crazy. And then all you see is you see a candle pattern of a breakout. The breakout should let you know, okay, something might be going wrong here. Sometimes you have your failed breakouts, but first sign, you have your breakout. And then you have this aggressive move. It doesn't come back down. On this chart, if you look at the tape on this, and you can't really see the tape. I didn't record the tape, but when you're looking at the time and sales on this stock, all you were seeing was green. It was aggressive green. As soon as it broke over $6, it didn't come back down to $6. It went $6.10, $6.20, $6.30. That is a sign you need to get out, because buyers are aggressively buying the stock, or shorters are aggressively covering their position. And that's a sign there's no hope. You're done. So you need to watch the tape. That's going to be a big sign. Make sure you're watching the tape and see how the tape is printing. If it's printing really green, if it's buyers aggressively buying a certain level, if you see no sellers in sight, that could be a sign you need to get out. On top of that, you need to size down on these positions. If you have 10,000 shares on this particular stock, you need to consider cutting your position or sizing down. Let's say you take take 5,000 shares off the table, and then you take another 3,000 shares off the table, just to make sure you're not taking the biggest loss in the world. You just might be taking a mini one. But if you do, you're not taking a sizable loss where you cannot recover. So let's say you have 10,000 shares on, now you have 2,000 shares on. So that would be the best way to play this. Just make sure you're sizing down and you're also watching the tape, because when you watch the tape, a lot of times you can get out of these positions a lot faster. As I saw on the tape yesterday, as soon as it broke over $6, it was game over. It went from $6.10, $6.20, $6.30. It was aggressively hitting those new levels, and that's something you don't want to see if you're short on this play. If you're long, you want to see that. You're making a lot of money. You know the trend is your friend. The flow is on your side. But if you're short, you want to get out of that as quickly as possible. And a lot of times you can see that before it even occurs. So one thing I noticed on this play, as you see it creeping up, it hit certain levels where it just would not sell off. So it was hitting a couple of resistance levels, and that's why I say it's very important to look at your support and resistance levels. It was hitting the support level right here at 550, and it would not go back down. It was aggressive buyers right here at 550. You would get down to 550, it'll bid back up. down to 550, big back up. And you can see from this candle right here how it got all the way up to $6 again, came all the way back down to 550, and then bid right back up. That's not what you want to see on the short side, because that shows that buyers are sellers are getting tired. They're not willing to sell below these certain levels, and that's a particular warning sign to say, okay, maybe I need to get out. You don't have to get out there, but it's a signal to yourself and be like, okay, I need to pay attention to this, because this is a sign that this may be a short squeeze scenario, because buyers are not, sellers are not giving up that level. So you need to look at your support and resistance and see where holds are occurring, where they won't drop down below a certain level. So pay attention to that. And then also the tape as well when you're looking at aggressive buyers. And last but not least, what you also want to do is set a predetermined stop. This goes without saying. You definitely need to do that. But in these scenarios where you have the aggressive short squeeze, where this one happened in a matter of seconds, it goes from $5 to $6 to $7 in a matter of minutes. And this particular move right here, this little 3 candle thing, happens so fast. It's very hard to just cut a loss that quick the way it happened. So have a stop loss. I recommend having some type of stop loss, either like far away from your position, or just in case things get out of hand, where you know, okay, if it gets to this level, I'm done. I don't care what's going on. Just have it out there. Have a particular order out there just in case you just cannot get out of these positions fast enough, because this one happened so fast. It was so aggressive, and it's very hard to take advantage of that. Last but not least, I want you to keep your emotions in check. Stick to your game plan, because when you're in these scenarios, it's like being in a fight. You know what you need to do, but all of a sudden you get punched in the face and you're like, oh snap, like this really just happened. So keep your emotions in check and have a game plan, and stick to the game plan. Whether you need to paper trade it a little bit to get comfortable with the game plan, you need to go in small originally to get comfortable with the game plan, whatever you need to do. But understand, if things have if-then scenarios, if this goes against me, if this goes terribly bad, what am I going to do? And have those things written down where you say, okay, if this goes terribly bad, I know I need to get out, or I'm going to do A, B, C if this happens terribly bad. So figure that out before you get into the trade. So those are some tips to avoid a short squeeze, how they occur, what causes them to happen. If you have any questions, let me know down in the comment section down below. This is my experience with a short squeeze. Ironically, this thing just happened and it was crazy. Not happy with what happened yesterday. I did take a loss, but it wasn't as bad as it could have been if I sat in this position too long, got emotional, was hoping this thing came back down. Sometimes you just need to cut the loss and call it a day. But that's going to wrap it up for the video. It's me, your boy, Blessed Applesauce. Stay blessed. And I'm going to see y'all next time. I'm blessed to invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.